Hey everybody, welcome to Bura. In this episode, I'm going to be talking about Udemy's earning per share and some analysts' predictions. All right, welcome back. So we can see that it's kind of been consolidating here for the last little while. It's gone down a bit, and this was kind of when the market was crashing. But things have been kind of going up in a small range in the last few days. Nothing that's too different here, but you can see here that if we even take a look at this here, we have a much bigger consolidation range. So something could happen, but basically what's happening is that on tomorrow, actually, after the bell, Udemy will be releasing its financial report, and I will be taking a look at it the following day. So you'll be taking a look here. Now, there's a couple things. Let's take a look at some predictions here. So there are some predictions here, and people are basically saying 28, 34, 24, 35. That would be an all-time high. And if you bought today and it went to 35, you'd more than double your money here. So you can see that this is, from Friday, but if you look at this here, it's 13, not really too different from where things were on Friday here. So you can see here that everyone's kind of predicting something in the 20s, and we'll see what happens here. But it depends on what will actually happen here, because if Udemy does meet its targets and beyond, then it will do quite well. The problem is that if it doesn't, then expect the market to tank it. And we saw this with Facebook here. Now, in this market here, this market is incredibly volatile as of late. And one of the reasons is that if nothing is a sure bet, then investors are going to run for the doors. And we saw that with Facebook Meta. No one thought that the news would be as bad, so everyone just ran for the door. And you can see that the shares went down quite a bit. And so this is something you need to understand as well. So what happened in the last quarter of an e-learning company? Well, Black Friday and Christmas sales are very good, as well as January sales. Now, January sales probably won't be reported in this report. If they do report January sales in this report, then you can expect it to be pretty good. However, the next quarter is when you really want to pay attention. February is the worst month by far for any e-learning company. There's two reasons for that. One, there's less days in it, so there's only like 28 days or 29 days on a leap year. And the fact that consumers are spent. They're spent from Black Friday, they're spent from Christmas, and they're spent from all their New Year's resolutions, which e-learning is a part of all of those, right? This is not the big bombshell one that you really need to look at. It's the next one that you really need to look at. And if the Fed is tapering, meaning there's less money in the system, you could expect these e-learning companies to, not do as well. Because e-learning only does well when there's a crash, not when there's, let's say, a slowdown. When there's a slowdown, people kind of just like hunker down and they don't learn new skills. In a crash or a kind of recession type situation, people really do spend on education, and it will remain to see whether Udemy does well. Because the reason, and again, if you weren't around in the last the global financial crisis, people really did spend money on upselling their skills, because either A, they don't have a job, or B, they have a terrible job which they want to upgrade to. And believe it or not, the courses on Udemy are really good. And this is one thing that I'm, of course, incredibly bullish on Udemy, is that the product they provide is pretty good. However, they should not be selling subscriptions. They should make the marketplace scalable so companies like mine can make $10 million a year. All right, so that concludes this video. I want to know your thoughts down below. What are your predictions for Udemy's next quarter update? Thanks for watching, and I'll see you in another video.